Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. I'm going to go through some of the comments, answer your guys' comments. I'm just going to rapid fire some of this stuff. I started on this one just because I wanted to answer this one. But here's the question, or the statement, I should say. It says, Harry Dent says deflation is coming within a year or two. He says the S&P 500 is going down 85% and gold 50%. He says every asset is going to crash. Guys, just go do some basic research on this guy, all right? I used to listen to Harry Dent. I got some information from his demographics. He's been calling for a crash every single year for like the past 25 years. I mean, literally, it's been every single year. Economist Harry Dent says Dow could plunge to 17,000 points 2016. Harry Dent, the biggest joke in financial media. Casgains Academy. Yep. Where's the crash in 2014? In 2015, he then went on to say a crash and is predicting that will finally happen every single year since like the 2000s. Literally, he's been calling a crash. The one time it crashed in 2008, he then says that he got it right. He predicted a crash in 2011. Harry Dent called for market crash in 2013. Harry Dent calls for prediction of 87% stock market crash in 2022. Harry Dent, stocks will fall 70 to 90% within 3 years. January 31st, 2017. Dow 6000, Harry Dent, 2014. This guy has been predicting a crash every single year for decades. Do you think I'm going to listen to this guy? No, he's one of the reasons why I actually started my channel and started looking into all of the information. Now, no one's going to get it right all of the time. That's fine. But to get it wrong that much all the time, okay, there's something wrong with that. Now, there's other people that they're asking, what do you think of David Hunter's thesis? That once the Fed pauses liquidity, will come rushing in, creating a blow-off top, but eventually will lead to a major crash due to the leverage in the system and raised interest rates, which then leads to QE and more inflation. I don't think he knows. I don't follow David Hunter at all. I don't think he understands the market, in my opinion. So I don't follow him. Now, there's other people making comments down here, and that's fine too. Japan peaked in the 90s. The US is going to peak after this inflation cycle. That I do agree with. I do agree with that. Completely. And I know there's some people, Andy, I told you in a video many months ago, please stop making folks losing money in the impossible commodity bull market. It's not, guys. We've been in a gigantic bull market in commodities already. We're getting our first pullback. Calm down, everyone. It's funny. No, I don't want to be in the dollar. We have inflation in the dollar and the dollar's losing value. And I've been in this trade for a while. I'm not going to trade out of it. We still have problems in energy. Now, does that mean that we can't have a 6-month or a year pullback? It doesn't mean that we can't have that. This could be the bear trap. What is the bear trap? The bear trap, and I'll put it in, bear trap in a stock bubble. And what I'm looking for, I've said this before, that we could have a bear trap at some point. It's this first sell-off here is the bear trap. And that's what this guy is right here. So we take off, and I think that's where we're at. We did the takeoff in 2020, 2021. 2022, we're going to get our first sell-off. It's the bear trap, and then we're just going to rocket higher. That is what I think the setup is. We're not going to have deflation. Deflation comes from credit destruction. I don't think there's a chance that credit destruction is going to happen in the housing market, given where we're at this time. I just don't think that's the case. If that's where you think that's the only spot that deflation can really come from in any sort of meaningful way. They can hold this down, but they can't get deflation. You'd have to have people start really foreclosing on homes. There's so much equity in this real estate market at this time that I don't think that we could have a deflation in the next year or two. I think maybe in 4 or 5, 6 years, maybe, but not in the immediate near term, because I don't think that the foreclosures are that far along in the process, and there isn't that many in the system and in the process. So I think that's just, I'm going to call it not responsible to be making a call like that, because there's no indication of it yet. So there's that. Let me pull it back up here real quick. Then we've got some other people. So that's my opinion on the deflation, inflation movement there. So I'm going to go back real quick and pull up my comment sections to hit some of your comments. I accidentally closed it. So yeah, what we're going through in the housing market today with higher interest rates is nothing like the mid-2000s, not even close. Inventories went through the roof very quickly. We had foreclosures coming out the yin-yang, and people were in negative equity situations. We're not in that situation at this time. Now, I can easily change my mind 2 years from now if we get into a situation like that. But we don't have those types of loans. We don't have that type of stuff in the market. So I don't think that we're in that market. The fundamentals in oil still look absolutely ridiculously good. So we've got short-term selling pressure in oil in some of these markets. But we've got the fundamentals that never looked better. I've never seen fundamentals better than oil at this time in any asset in any time frame of any period, ever. So the question that you're going to have to ask yourself, and this is going to be related to yourself, is do I sell based off the technicals, or do I keep holding because of the fundamentals? And that's where we're basically hitting our heads against each other. It's, do we do the fundamental investing, which I do, and the fundamentals override the technicals. That is what I am, in my opinion, is. Now, someone saying, oh, you're going to lose money, that's an opinion, but I mean, it depends where you buy this stuff. It depends how you cost average in. The best thing that most people can do if you're a long-term investor, at least I should say, it's not advice, it's just me doing this, is you want to buy on pullbacks that are substantial pullbacks over like 30 or 40% pullbacks. You sprinkle in and then you ride it higher. I mean, that's, if fundamentally, if it's a good sector, that's how I've been playing it. I buy off support levels. I buy off of fib retracement levels. If we're in the medium, basically in the middle of a move. No one's going to catch the exact bottom. I'm not a trader, and most traders, they don't make money anyway. They get wiped out, and 95% of them go home with no money and large amounts of debt. And it's probably even higher than that. It's probably 99.9%. Very few make very good money trading. Very few people. I don't know of many. Now, there's a couple of situations that people, this is how they really make it, if you want to know. They find situations where they've got large asymmetric bets and they pile into it. They may lose a little bit of money on that bet, or they've piled into it and it's the symmetry is so large that they make a whole bunch of money on one of the trades. A whole bunch of money. So it's kind of like buying SM Energy at $1.50 and riding it up to 40 or 50 bucks. And then getting basically a 30-something bagger. And then you dumped a bunch of money into it and you made all that money on one thing. But you could lose on everything else and you'd still be up gazillions of dollars. So it's position sizing and getting into a couple of really good trades with huge symmetry, asymmetric, large upside, very small downside, and you kill it in a portion of your portfolio. That's where you really make a bunch of money. Now, it's not about winning on every single one, because you don't have to. You don't have to. Now, if you're buying late stage in the game, then you're getting smaller and smaller asymmetrical bets. You're getting smaller upsides, and the downsides are starting to equal each other. Your symmetry isn't there yet. And some of these things that you get in, you may have to sit in them for a couple of years. That's just the way it works. You may even have to sit in them for a decade. But if you get 10, 20 times your money with very low risk, it's worth it. Because everybody thinks you just get in and you start making money and it's an easy ride. It doesn't work like that in the majority of the commodities sector. It's very volatile. It goes up and down a lot. And sometimes you're going to have to ride through some really big volatility. At least that's what I've experienced in all these bull markets. So I don't think that, I did that commodities bull market update in the thesis. I still think that the fundamentals are well intact for all of the energy sector. And I think most of these guys calling for crashes. I mean, yeah, we could crash and it could go down, but they've been calling for crashes like every single year. It's pretty annoying, actually. So coming on down, the money that our central bank system creates isn't real. The wealth that valuable companies and workers create is real. I completely agree with that. The central bank is designed to steal that wealth from all of us. Outstanding analysis, Andy. Many of us would be lost without you. Well, it is, because that's all they do is they steal money. They create deposits. They create basically entries into a book or a ledger, and then they just steal wealth. They don't create anything. That is true. Why is my portfolio of uranium and PM stocks down 70% from its peak? Because that is out of favor at this time. And it will come back into favor when that money rotates around. And right now, people are afraid. And from its peak, I mean, your 70% pullbacks are actually quite normal in commodities. They do crazy stuff depending on what companies you're in. On a fib retracement level, 61% is actually a common pullback where stocks start to reverse. It's not as common in some of the companies where they control the sales price of the thing that they sell. So they don't have as many large pullbacks. Commodities are just amplified. They're very volatile, but you can get incredible gains in very short periods of time, and that's what makes it worth it. But you have to be very patient. Hello, Uganda Gold. Yeah, Uganda Gold, I think, is a fictitious thing that came out. It's not actually real. They came out saying that they have all this gold. I don't believe it to be real. That's my opinion on that. Coming down here. Okay, so these guys that say like Telegram at finding, this isn't me. This is someone else. So be careful. There's a bunch of bots out there that just keep piling garbage into the comment section. It says, when do you think they will begin to restock the federal fuel reserves, the SPR, Strategic Petroleum Reserve, and how will that impact the oil markets? I don't know when they're going to restock it, and I think they have a problem. We have a problem because it's going to get real tight in the oil markets. Funny, the oil future up so much, but the oil companies trading sideways. Only weird. It happens, guys. It happens, and sometimes the stocks go down, even though the fundamentals look great. But that's where the opportunities are. That is where the opportunities are, is when the fundamentals and the short-term price movements diverge from each other. That's an opportunity. And I know everybody wants their gains to happen immediately, and they want them to go straight up, and it wants to be an easy ride. The markets don't work like that. You get these pullbacks, they go sideways, and a lot of the time they go sideways and pull back longer than they actually go up. And then at some point, when the money starts to rotate in a big manner, that's when the big money's made. And I still think that's in front of us. I think we're probably getting our first pullback here, and then the third wave will come. But this pullback could last a little while. There's nothing saying it can't, but the fundamentals in oil look incredibly bullish. And if we have massive problems in oil, that's going to push the CPI higher. Notice that any country that has massive energy problems, like Germany, has ridiculously high consumer price index numbers. The jump in it. So energy is a indicator or a driver of high consumer price indexes. So I think that we have a problem in energy. I think OPEC's out of spare capacity, and now it's just a matter of time. In the short term, we're watching our investments go down. Perhaps the big guys need to position in it more so than what they have. I don't know. They're trying to scare people out. They're not going to scare me out, and I'm going to be buying the bottom of this pullback myself. If you guys are interested in what I'm going to be purchasing, you can look in the description link. You can sign up to the Platinum membership of the Finding Value website. and you'll see exactly what I'm doing. So that's if you guys want to know what I own and what I'm buying, sign up and you can find out what I'm doing on that. And right now, I'm not really doing much of anything at this time, but I'll let everybody know what I'm doing and when I'm doing it in the description link for the Platinum members. All right, guys, we'll catch you later. This is Finding Value.